Nothing happens in a vacuum. Nothing is happening for no reason. And if your brain is trained to figure out the why, ask yourself the why, and what are the primary drivers and what are building the forces, then you write a proof, basically. Most of the things that our headlines are created around are very downstream of the primary drivers of what's creating them. You have to be non-reactive to the noise in the media and understand how it connects to the primary forces that are creating California and New York losing, Florida and completely. Yeah, it's not a political statement, it's just census data, IRS data, it is what it is, right? I believe while the first surge was fueled by post-COVID uncertainty, the echo exodus is being fueled by certainty, because the divergence in policy across states now is undeniable and getting bigger and bigger. In Miami-Dade, over 2,000 a foot, it's over 85% all cash.
And even the ones that are getting loans are putting 50% down.
Like, yeah, correct.
It's wild.
We don't have these liar loans with nothing down. Right. It's not a thing. Transaction volume is up 2,000% versus 2019.
Wow.
That's 20-fold.
That's crazy.
Yes. It looks almost fake, but it's not. And they said, really? I said, yes, this is new to this market.
Hello, our world. Welcome back to another episode of RWorld Talk. This is number 4 in the series from Rock the Market live in Palm Beach. And we've got Anna Bozovic with us this morning. Welcome.
Thank you very much for having me.
Thank you for being here, guys. We've got, this is going to be a special treat because she is literally one of the smartest people that you are ever going to hear from on this pod. I first saw you at Inman on tour down in South Beach, which was probably like 2 years ago.
That's right.
And you had given the most incredible presentation on what was really going on with the market. And the way that you see and comprehend data is vastly different from what most people use data for. And we're going to get into the meat and potatoes of all that today because most realtors make a living selling real estate. You are the one that's really selling the information and the data about what is happening in the real estate market. And that right now should be at the forefront of what everybody's thinking about.
Correct. And how the data really is a reflection of the underlying transformation that's occurring in the country.
Mm-hmm.
It's all about putting the data within the context of the macro forces that are shaping the reality around us. That's the interesting part.
Okay. So something pops off in Iran and you're saying that trickles down and there's like data implications and things that are happening with the market.
There's data implications to everything. You're right. There's a butterfly effect that could be.
Yeah.
But more relevant to us is just the shift in what I've been calling economic center of gravity that's happening in the nation and the forces that are driving that.
Okay.
And how I feel like it's still actually very much early days of that shift.
Oh.
And that momentum is just going to keep building. There's no a reversal is highly unlikely.
Okay. Well, let's get into that and talk about that. What made you realize, first off, that the market needed something like Miami Deal Sheet and...
Oh, Analytics Miami, which is my original site from 12, 13 years ago, where I initially started publishing these reports. Well, I realized that I needed it.
Okay.
And that was actually the first start of it. I got into real estate when I moved to Miami about 13 years ago. And I could not find what I thought was good information for the residential in the residential space.
Okay.
And I need to be able to see a market. I really see it if I'm going to talk about it. And
sure.
What I mean see it, I mean understand and see the forces that are creating the dynamics around us. You have to understand what forces are pushing the trends, what's creating the trends, if you're going to start to understand where things are going.
Okay.
Anybody could tell you that the median price of a house in Miami-Dade County or whatever, who cares? It's a data point.
What does that mean? Yeah.
Nothing. A data point is a snapshot in time.
Sure.
It tells you nothing about where it was or where it's going.
Right.
And that's where the value is. And so I started to put together information for myself because I couldn't find any good information.
Okay.
And I had a friend / mentor back then who said, wow, this is really interesting. You should publish it. And it's like 12 years ago. And I remember thinking, but it's such simplistic data. Like, who cares? It's not interesting. It's easy. And he goes, no, it's not obvious. I thought it's obvious. He goes, no, it's not. And I started publishing it and then it kind of evolved from there.
Okay. Why don't you tell us a little bit about your background? Because that is not something that we tell realtors, be knowledgeable about the market. You've got to be able to speak about what's happening in the market and what the trends are. They're looking at comp sales very simplistically. This is, within a half-mile radius, this is what things have sold for in the last 6 months. You are like leaps and bounds processing data at a rate and in a style which most people that you say is very simplistic the average realtor, it's nearly impossible for them to comprehend what's happening in your brain.
Right. I
So
lose sight of
where's
this.
where's the background? I mean, how did you end up being in this position of being able to understand all that?
I studied theoretical math and physics at Columbia University, and so I
Wait, rewind.
Okay,
Guys,
so
she's better than you.
I'm super nerdy, everyone, in my part of my life. So when you study math or physics or something like this at that level, it's actually an exercise in abstraction. There are no numbers. Your calculator can't help you. So what you're doing is writing proofs. And when you write a proof,
Yeah.
you're creating order out of n-dimensional something, uncertainty, chaos, whatever it is.
Mhm.
And so it teaches you how to think is really what it does.
Okay.
It teaches you how to recognize fundamental principles, how to build logic chains. It teaches you how to think,
Okay.
how to see what matters in data sets, how to find boundary conditions, all these things. And so it just trains your brain to think a certain way and to zero in on fundamental principles, primary drivers, because nothing happens in a vacuum. Nothing is happening for no reason. And if your brain is trained to figure out the why, ask yourself the why, and what are the primary drivers and what are building the forces, then you write a proof, basically.
Mhm.
And that's what I do in my mind all the time. I'm not saying something because I made it up. It's because I have a logic chain in my head that
Okay.
gives me great confidence in believing what I'm saying.
Okay. Well, that's got to treat you well when you're on stage explaining this stuff to
Yeah, it's fun.
everybody. Yeah. Okay. So right before we started, we said we're not going to ask you any question that is going to trip you up. And she's like, "No, this is what I like. I need this." So,
It's fun.
yeah. Ask me wild questions out of left field. So obviously, there's no shortage of real estate news today. So what kind of information do you think most people are consuming that is just absolutely not useful in today's world?
Most of it. To be very honest, most of it. News is a product.
Yeah.
There's headlines are a product, and there's some great journalists out there. I don't mean to disparage everybody or to disparage anyone at all, but the nature of the product is that it is a product, and
Okay.
it's gained to harness your attention. And most of the things that our headlines are created around are very downstream of the primary drivers of what's creating them. And so you have to always not let things, you have to be non-reactive to the noise in the media and understand how it connects to the primary forces that are creating the reality that we see around us.
Sure. Well, it's funny that she's that she's saying that because Tom Bond from Inman, who we just had on the show a few weeks ago, was actually in the green room next door. So we're gonna put the two of you in a room, and you guys could just duke it out. And I've got a feeling that you would win because I know that you've got an MMA background. So
Jiu-jitsu.
Jiu-jitsu. Okay. So you spend your days, obviously, we've already spoken about this, or you've already led on to this, studying the most dynamic markets in the country. You're not talking about even though you're analytics Miami. I mean, you're looking at
Yeah, correct.
the broader picture, like big scale. So how has that changed the way that you think about real estate and what's happening in real estate? I mean, you came here to get into real estate and start selling Miami. But you're doing this at a completely different level than the rest of us are.
So, first, what is the question?
How has it changed the way that you think about real estate?
How has what changed?
The studying the markets across the country.
Yeah, so really, it's the post-COVID world is quite different than the pre-COVID world. It's supercharged a transformation of the country. And it's very exciting. And I think that we're lucky to be in South Florida. It's very exciting to be experiencing it from South Florida, which is one of the places that's benefiting from the shifted focus that's happening across the country. We're very much an upswing. So I think that the magnitude of the change that's coming across the country is still underappreciated. And I think it's very exciting how it affects our real estate markets. And I think there's a lot of runway and a lot of room. And so our real estate markets, what's happening in the high end of our market, especially for new and prime product, it's like a scorecard. It's a reflection of the flight of capital domestically.
It's been pretty wild.
Oh, yes.
The trends that I've seen, and you maybe are going to correct me if I've been thinking about this the wrong way, but it's interesting when I look at the numbers and I see that there's like certain price points, which are high-end luxury price points that are sitting and nobody's touching them. But then you get into like super, ultra luxury is being bought so fast. The cash is just cash is king. And like people are buying these trophy properties that are like in the millions of dollars.
So the pattern across South Florida that's holding for Palm Beach and Miami-Dade counties is the same pattern, is the higher you go in price per square foot, not just overall price, The more we're outperforming pre-COVID realities, and the larger the percentage increase in transaction volume. And when you isolate for higher prices per square foot, you're actually isolating for new and prime, not just big and expensive, because things are built to a higher standard.
Right.
And so the pattern is actually quite shocking. And I just released my mid-year report that's going to be on my site soon. And I think that Bloomberg Media today or very soon is publishing a piece on it about how over 30 million, for example, were year to date far in excess of last year, which was a record year. And it's 90% all cash.
Yeah,
And
it's
so
wild.
it's wild. But the same the same pattern is holding, not just at super trophy property over 30 million plus, even at 1,000 a foot, we're actually up year over year and at all-time highs, especially for single family. And so what we're seeing in the data sets across South Florida is that we had this, when we look at new and prime, however you want to cut it, the patterns were the same, just the slopes were a little different. We had a surge post-COVID.
Yeah.
And that surge, I believe, was fueled by uncertainty during that time. There was like a cataclysmic event, there was uncertainty, led to a surge in people moving, changing how they lived.
Yeah.
It kind of
Yeah,
broke
the
habits
migration
long enough
patterns
to,
changed.
to allow the formation of new ones, all these things, and we were benefiting from it. And so we had this tremendous surge post-COVID. And then across all segments, there's a little bit of a dip in transaction volume, not anywhere close to pre-COVID, but it's like the surge kind of stopped and it went like this. This year, we're past new highs. There's an echo exodus happening. And this echo exodus is reflected again in the surge in luxury data, like transaction volume. And I believe while the first surge was fueled by post-COVID uncertainty, the echo exodus is being fueled by certainty, because the divergence in policy across states now is undeniable and getting bigger and bigger by the month, it seems.
Right. Wow. Incredible. Why those ultra high net worth or ultra luxury properties? Why is there such huge demand for that $30 million plus?
It's a new force in the South Florida market. And I think it's the surge that we're seeing here is a reflection of the region's new stature in the global marketplace. These buyers were already there and they're used to paying more in other places. So this is actually a birth of this trophy property class in South Florida, which is why we're seeing a surge. And when you look at data sets and you see a spike and then it's a sustained volume that didn't exist before, that's indicative of a new force in the market.
Okay.
And that's what's driving that here.
Interesting. And we've had, everybody's telling us luxury. So that's where the money's going. So you spend your days, let's get into this. What is the biggest lesson that you've learned from watching Miami evolve over the past several years?
All right, lesson. One of the big things I've observed is how resistant people are to change and how much they don't like it. It took the press. It took I bubble reports, all these things. It was this huge misperception of what's happening down here, and I think that people are finally catching on. But I think they're still underestimating the change that's happening across the country.
Okay.
And so seeing kind of history repeat itself that way has been very interesting. And you see these scripts replayed. It's almost shocking to watch it unfold, even for me. So,
this is something I just last week I was in a meeting and people were talking about economic drivers and political forces that were in play, looking very eerily similar to the big bust. Are you seeing any sort of bubble or anything of that nature that's happening in the country right now in the real estate market?
The country here, no, we're a heavy cash market.
Yeah.
We're in Palm Beach right now. Palm Beach over 5 million for single families. I think already 90% all cash. Palm Beach actually is even more all cash than Miami-Dade, which is very high all cash. Yeah, correct. So no, bubbles are usually defined looking backwards after they've popped, and it's usually when the underlying assets can no longer sustain the debt and it kind of implodes like a flammable house of cards. We don't have that set up at all.
Too much.
We have a very high cash market throughout the whole market. It's just more and more the higher up you go.
Right.
But there's no piece of this market that's being sustained or driven by irresponsible usage of debt. So I don't see it.
Yeah, I'm a real estate broker, and I look through my books on a regular basis, and just where did people get the money from? Was it which mortgage company? And it's less and less have a mortgage attached to them. It's like I look at my books, it's like cash.
It's shocking.
Loan, cash. It's nuts. Where's all this money coming from?
I know.
It's crazy.
In Miami-Dade, over 2,000 a foot, it's over 85% all cash.
And even the ones that are getting loans are putting 50% down.
Like, yeah, correct.
It's
So
wild.
we don't have these liar loans with nothing down.
Right.
It's not a thing.
So if somebody wanted to be their most informed agent in the market, where do you think that they should start?
Oh, good question. Where should they start? Oh, I have a hard time with that. Where does one start? I would start educating myself on understanding where they are in a market cycle, the history of the submarket that they're operating in.
Interesting.
So that you have to get granular at some point, obviously, in real estate, and there's value in that. But you also have to understand where that granular piece of information lives. You have to have context for it.
Sure.
And so I think that you need to have some concept of the history of the market that you're working in.
Do you think that the most recent sales, like we were talking about, an agent that just typically puts together, CMA, this is what sold in the last 6 months. Do you think that it would be beneficial for them to really dive into that data a lot more than they are with just looking at the past 6 months and sort of what the comp sales are? Or do you think that the informed agent, the properly knowledgeable agent, should be looking, like you just said, at a trend?
You need both.
What's been going on for the last 2 years in this market?
Yeah. You need both, actually. You need both. So you need to know what's happening in the immediate term for negotiation purposes, because that's what people will look at. And then you also need to understand where the market is trending to give your investor or your client confidence on the merit for the merits of their purchase.
Sure.
Where are they getting it in the cycle? Where's the growth? Where's that?
Now, as far as the appraisal community is concerned, they only go back 6 months, and they're only looking at a very small portion. Do you think that's going to change in the future?
Luckily, we have so many cash buyers.
That's right.
Exactly.
Yeah.
I don't know. I hope so. I mean, I have in the past been involved with some very questionable appraisals where you cannot believe what they've sent back.
Yeah.
So I hope so.
So most agents, we're going to talk about reading the market before everyone else. Most agents are really reacting to market reports after they've been published. You just said you can't see a bubble until after it's popped. So you're always looking ahead. Well, looking at where we came from, but really looking ahead at what's going to happen with this market. So what kind of indicators are you watching before everyone else even notices that is a data point to look at?
Sure. I look at relationships of supply and demand, just basic market fundamentals. And within segments, you have to segment. Segmenting is very, very important, especially if you're looking in the luxury sector, because if you look at the overall market, the action at the top will get lost because there's so few transactions compared to the whole market.
Right.
So you have to properly segment. And then when you properly segment in various price tiers, then it's important to look at how supply-demand relationships are playing out. You can see if their inventory buildups, for example, if inventories are dropping, how's that related to sales volume the last quarter, the last 2 quarters. Those are important indicators to show if the market is tightening up or loosening up.
What are your metrics? Where are sort of your highs and lows when you're talking about that higher?
How do I segment?
Yeah, how do you segment?
Oh, okay, a few different ways. I'll segment based upon overall price, and then I'll segment on price per square foot because I think it's interesting also. So for overall price, $500,000 and up and below, $500,000 to $1 million. Then I'll look at 1 to 2.5, 2.5 to 5, 5 to 10, 10 and up, and then 30 and up for trophy properties.
30 and up is a trophy property in your
because there's so few transactions. I was saying I just contributed this piece in Bloomberg, and they asked me for historic data and 30 million up, and I said there isn't any.
Yeah.
And they said, what do you mean? And I said before COVID, the price point basically didn't exist. The earliest sale, I think there was one sale in one. It was like one per year some years, like 2015 had one, something like that.
Right.
Before that, it was 0. And they said, really? I said, yes, this is new to this market.
Yeah, there was God, what was the name? The Palais Royale was like the most expensive house in South Florida, down in that was on Hillsborough Mile in Broward County. And somebody built that thing. It was like an incredible piece of property, tons of gold, very extravagant. And that property sat on the market forever. But it was somebody's trophy. But when you're spending that kind of money, and you've got that kind of money, you kind of want to build your own trophy.
And we're seeing that in the South Florida market now. A lot of the most substantial, impressive single-family homes are not going to come to market. They're being built custom because the buyers couldn't find something to their caliber in this market. Isn't that interesting?
I always thought that it was so funny when you go and you see these properties that are $15 million, and I go by them on my boat, and I'm just like, God, like who lives there? That house is incredible. And then you go by the following week, and the house has been torn down. And somebody's just putting up like they wanted something modern. So it's like, let's buy a $15 million house and tear it down. I'm just like,
this is not good enough for me.
Incredible. My goodness. Somebody just built a massive, 3 lots put together. And I think they had it listed on the market for like $55 million and everything's LED. The house was painted black, but it was all just like black and black steel and glass. And it's just a couple doors down from my business partner's house, which is not a $55 million property. But it was just amazing to see the amount of money that was coming into South Florida, and that somebody was just, we'll just buy 3 multi-million-dollar properties, tear them all down, and just put up the biggest house that I've ever seen in my life.
This emergence of this trophy property asset class. We're seeing it, the office rents.
Yeah.
What was the funny one? It was Peter Thiel's family office allegedly signing a lease at $250 a foot at 830 Brickell, which is a record. Past $100 didn't exist here as a lease point, and now it's a thing. And Peter Thiel, as we all may know, used to disparage Miami and say you can't take businesses seriously that are in Miami. But apparently he's here now too.
Everybody's coming down to Miami. Well, I mean, they're calling this Wall Street South, right? What do you think that is, not what do you think? I know that so what's happening right now in Miami that you think that headlines are completely missing out on?
I actually think headlines are recently catching on. A few years ago, there was this great resistance in press to print positive stories about Miami. They basically didn't want to do it. There were op-eds like, what's wrong with Miami now? All these things talking about how it was a flash in the pan, a bubble, all these things. So recently, actually, I know from the journalists I'm speaking to, there seems to be broader recognition of what's happening here. Okay. So they're seeing it. The part that I think still is a little bit underappreciated is the order of magnitude of growth that we've seen at just even like 2,000 a foot for single family in Miami-Dade County, past 2,000 a foot for the first half of this year. Transaction volume is up 2,000% versus 2019.
Wow.
That's 20-fold.
That's crazy.
Yes. It looks almost fake, but it's not.
Really?
Yes. And I feel that's underappreciated, just the magnitude of that growth, and that it's sustained and that we're up year over year.
And the rest of the country's going, oh, Miami's sinking. Well,
right. Or they say, well, New York luxury is sustaining itself. Yeah. Maybe, and sustaining is very different than a 2,000% increase.
Wow. That's absolutely incredible. I had no idea. Where do you see opportunity that most people are not necessarily paying attention to?
That's a tough one because we have such a big light on us.
Mm-hmm.
I mean, I've been saying for a while that I think that prime, I mean, it's not a secret, so why they're paying so much for it. Prime waterfront single family is still so great, because if we believe the story that Miami and South Florida will keep growing, then that is prime scarcity, and you can't build more single family inventory vertically, obviously.
Right.
So I still
think you can't make any more water.
Right. So I think there's, as much as it has risen, I think that there is still value there, just because I believe this thesis so much.
Okay. How does having better market intelligence actually change the conversation that agents can have with their clients?
Oh, because then you're speaking like an advisor, not just a salesman. And they might believe you.
There you go.
Exactly.
Well, no, truly, you're not trying to sell them something. You're arming them with the information that they need in order to make a huge decision.
And it's a different conversation if someone actually trusts you and respects what you say.
Absolutely. Yeah, I remember when I first got into the business, my mentor had said, you have to be so knowledgeable that you can always be telling somebody something that they didn't know they didn't know.
That's right. That's right.
So yeah, once you put that advisor hat on and start telling them about market trends that are happening, far different conversation than, isn't that a cute pool? Don't you?
Exactly. And then you attract good clients who appreciate that, and you want to work with people like that.
Yeah. Well, data. Let's talk about data being the new personal brand. Obviously, you have created a personal brand entirely revolved around data, but you've really been known as the trusted source of information. So was that intentional from the beginning, or did you see something that wasn't working out in your real estate business that caused you to sort of go down this road?
No, it really was not intentional. It was all part of this real estate experiment 12, 13 years ago. I started publishing reports, and the press started picking up on them more and more, and it kind of evolved into what it is. But I started 12, 13 years ago. I started to put together the information just for myself because I couldn't find good information.
Right, yeah.
And it kind of just evolved from there.
Okay. And do you think today's consumers are looking for realtors, or are they looking for those advisors like you just mentioned?
Well, I think that...
Or do they not know what they're looking for?
Oh, well, good question. I think that we're going to keep attracting intelligent people, especially from the Northeast.
Yeah.
And I think there's a higher expectation of what service is, and people want an expert at the end of the day with a significant, even if they're very wealthy and they have many homes, whatever it is, they still want to speak to someone that they feel is at least a little intelligent and an expert. And I think that's going to be increasingly important, especially in the higher end segments, as we continue to attract people from places like New York.
Sure. Yeah. And
a different business culture and all of it. Not to disparage again, but there's a difference.
Yeah, I agree. Not to disparage anyone, but when I came down to South Florida from living in Toronto, Canada, and selling real estate there, It was high paced. Everyone was highly knowledgeable about their craft. And I came down to Florida, and I'm just going, what's going on down here?
I was perplexed for years.
Yeah, like let's get moving on this. Like, I'm trying to buy a house. What's taking everybody so long in order to sort of get back to you and get things going?
Especially busy people want an expert they can trust.
Yeah.
End of the story. They don't
And
have
it's
time.
like, go do this
They don't have
while I
time.
do my thing.
If they believe you and you're the expert, that's what you're there for,
Yeah,
actually.
absolutely. But you know what? We're a little bit more laid back now down here in South Florida. But people from the north, like you said, they have a different expectation, especially if they have bought and sold property up north.
Correct.
Yeah. How has consistently sharing market intelligence helped build your reputation? Obviously,
Oh, hugely.
Bloomberg's picking up your
yeah.
pieces, so yeah, you're gonna have some reputation there.
It's been a great way to meet people. So
Excellent.
I'm lucky to have met amazing people in the industry leaders who have reached out to me because they read my reports. And
Yeah.
so it's been, I mean, actually, I think that the work that I put out has been the vehicle for which I've met pretty much everyone I know in the industry, to be honest. I'm really not that social. I don't network. I don't go out very much. So it's when my work goes out, people reach out to me. And that's been how I've met most of the great people that I know.
Well, I see every time you get off a stage, everybody just like flocks over to you because they just want to pick your brain. So that's what we're doing for you on a grand scale here today, is picking your brain. Why don't you tell us what's one mistake agents make trying to position themselves as market experts?
Not being an actual expert.
Tell us how you really feel.
You start asking questions and it crumbles. That's people have said things to my face where I'm just looking at them like, wow, it's completely wrong.
Oh God, that's got to be an amazing feeling to sit there and listen to somebody who's coming off as the expert, and you're just sitting there knowing all of the data and knowing everything that you know, and just go like, oh my gosh, you are so lost, you poor thing.
Yes, there are many such cases.
So if an agent wanted to become the go-to source in their own neighborhood over the course of the next year, what would you tell them to do first?
Approach it as a trust building exercise.
Okay.
And authenticity. I'm a big believer in authenticity in all aspects.
We have had 4 guests on this podcast since we've been at Rock the Market, and every single one of them has said the word authenticity. We started out, who do we have first? Billy. We had Billy Nash on first this morning. He said, you got to be authentic. And then we went into Jamie Betterack. She said, you got to be authentic. Then we went into James Harris. It's all about authenticity. And now you're talking about authenticity
totally.
again. Common theme. I hope you guys are listening.
It liberates you.
Successful people are here telling you got to be authentic.
And that's not, and it doesn't mean that there's a depth to authenticity. That's actually what I mean.
Yep.
You have to really know what it is that you're talking about. It's not presenting a house of cards. And then also it ties into connecting that with being your authentic self. And that's a different thing for everybody.
Yeah.
So whatever your authentic value add is, it's going to be different than mine or yours. We're all different people. So you have to recognize what yours is and double down on that.
Sure. Yeah. I've come in contact with agents that I know from the marketplace that you'll see them at a showing they happen to get a very nice high price listing, and you walk into that listing and they are walking around so snooty and like they are not being their authentic self whatsoever. They feel like they've got to portray their version of what they believe is that luxury agent, that luxury presence, and you're just going like, what the hell are you doing to yourself right now? Like that's not you. Be yourself, because you're coming off like douchey right now.
Exactly.
Like, not cool.
Exactly. It's hard to grow from that.
Yeah.
You might get lucky, get a few things, but it's hard to build something without
You're not the person that they hired.
Correct. Yeah.
Yeah. It's odd.
And it's no fun. It's tiring. Like, just be yourself.
Absolutely. Okay, so lightning round, because we've got to get her up on the stage so she can share with everyone. One market you love watching.
The waterfront, prime waterfront single family. I think that the trophy property emergence is very exciting.
Okay. One data point that you never ignore.
The all cash numbers. I think that's also a foundational number for our market.
Okay. Biggest myth about Miami real estate.
That it's a bubble.
Most underrated neighborhood.
Ooh, underrated. I don't even know.
You have the ability to like spike the numbers in a neighborhood.
I don't know. There's nothing that comes to mind. That's hard for me to say. There isn't one that comes to mind.
Is there a neighborhood that you have been watching very closely?
More than others? No. This is why I have a hard time saying this.
Okay.
Nothing is popping into my mind.
Fair enough. One prediction for the next 3 years.
Oh, next 3 years. I think that we're going to see more and more people coming from the Northeast because as I've been saying, they're doubling down on a socialist script. Very obviously, they're telling you what they're going to do, and I think that the eco exodus, as I'm calling it now,
Okay.
is going to keep going for the next 3 years.
Okay. You're all welcome here, but please do not New York my Florida.
Former New Yorker, I agree.
Yeah, there's a reason we left. Okay, two quick things. You built your career around helping people understand the market before everyone else. What's one habit that you've developed that keeps you ahead of the curve?
I mean, I read all the time.
Reading all the time.
I don't
Beautiful.
watch TV, and I read all the time.
Yeah, she mentioned that right before we jumped on camera. Imagine a brand new realtor walks into your office tomorrow. They don't have any listings. They don't have any clients, but they're willing to work their asses off. What's the first thing you'd tell them to master?
First thing I tell them to master, probably their immediate neighborhood and their neighbors. They could speak to them intelligently about their immediate market. There's people who already know them, and it's a good place to start.
Yeah, I agree. Yeah, start with your sphere because they're the ones that are going to promote you like crazy. Last question. What's one trend unfolding in the Miami market today that you believe South Florida realtors are seriously underestimating? And I feel like I've asked you this question.
New and prime. New and prime.
New and prime.
That's the difference in all the market performance. The people who are coming to us, we know this from the very, like the highest spikes in percentage transaction volume are price per square foot, not just overall price. And that indicates new and prime. And so that's where that new buyer is coming, very, very much so. There's a divergence, especially in the condo market.
Yeah, I've noticed the exact same thing. People, nobody's looking for the fixer-upper anymore. They want brand new, ready to go, don't have to touch.
They decided to move here, and they want to move.
Yep.
Yep.
Yeah, and I live in Pompano, and we never thought that little fishing village would have
Oh, yeah.
the Waldorf Astoria, the Ritz-Carlton, brand new W. Like, it's just, I'm watching these things going up, and they're selling like hotcakes.
Yep.
It's like, it's boom, 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 but it's gone.
Yep.
Amazing. Well, Anna, thank you so much for
Thank
being
you,
with us.
everyone.
Thank you for enlightening us. And we will see you guys right back here next Friday, 8 a.m. on RWorld Talk.